Well, all right. It is now Sunday. It's 8 in the morning here uh, in Las Vegas, Nevada. Beautiful day. Absolutely gorgeous. All right. Anyway, here we go. Let's talk about these markets and let's have a look ahead. That is the title of this video here. All right. So let's start off with this. Let's start off with what we know, because it's always about what we know. The mechanism here is very simple. I covered this extensively lately, especially on Friday when I explained in that video the Fed's balance sheets, plural, are going to explode. $6.7 trillion that we know of on the balance sheet we're allowed to see. This is going way up. I believe it's going to quadruple. With that said, with this amount of capital being pumped into these markets, how can they go anywhere but higher? They're inflating, hyperinflating. The Federal Reserve, now the central bank of the freaking world, is hyperinflating. They're funneling cash around the world to central banks around the world that are buying assets. They're acquiring assets with dollars created out of nothing. And they can get away with it for as far as the eye can see because there's no money velocity. The rate at which cash is moving through the world economy it's not happening. So that's preventing a massive hyperinflationary event from occurring for now. Notice my words here. One is coming. When cash starts to move, and it will at one point. I don't know when. I don't even care when. All I want for you and I is to get on the right side of this now so we're ready for it whenever it does happen. You understand? It's very simple. So, Fed is going to hyperinflate here. Hyperinflate the debt like we have no idea. And they have to keep doing this exponentially. In other words, they have to keep making it larger and larger and larger and larger. That's because, again, the monster, this is a monster, the debt bubble. It must be fed more and more the larger it gets. You understand? Very, very simple concept here. With that said, understanding the mechanism here, it's extremely stock market positive. This is why I said in the video on Friday, stocks are going to skyrocket. Stocks will skyrocket. Now, keep your eye on that 10-year yield. You know that. If you go to the CNBC website or you have the CNBC app on your phone, you can just look at the 10-year yield. It's 0.69. It was 0.72 the other day. We had a pretty big drop, and that spooked me a little bit. And then, of course, they floated out the story about China trade deal going well. They're talking again. Market loved it. We got a nice bounce higher here. Again, they're going to jawbone this market as well. And understand, this is not real. So they can sit there and float out stories about a China trade deal going well. We've been hearing this for years. The market seems to still buy it. Fine. That's just all well and good. We're going to be on the right side of this, just like we are now. Period. The end. Okay, let's talk about a couple of other assets. I explained to you about the Fed's balance sheet, plural, the stock market. I explained to you about the 10-year yield, crude oil. Let's touch crude oil. Crude oil must not drop significantly from where it is. If it does, that's stock market negative. You understand? All this stuff plays together in concert. Let's talk about cryptocurrencies. They have gotten hit over the weekend, and I want to elaborate on that a little bit. So what happened with Bitcoin, which is the granddaddy of them all, and all the other cryptos kind of follow Bitcoin. This is why I always talk about Bitcoin. Bitcoin broke 10,000. I mean, just barely broke 10,000, and now it has dropped to around 8,200. So what does that mean for us? I'm a holder of Bitcoin. You all know that. I own all the big cryptos. What does it mean for us? It means right now 10,000 is a hard top or a hard floor. We got to bust through that 10,000 and get higher and stay there a little bit, or go above 10, pull back to 10, and then Bitcoin will go higher from there. But right now, it appears that cryptos are under some pressure. I don't know why this is. Who cares? To me, this is an opportunity to get more of it. But at the same time, let's watch that 10,000 level on Bitcoin. Look what happened. Like I said, we went through it, barely. And now we kind of bled off a little bit. So that's a hard, resistance spot. There's resistance there at 10,000. Pretty interesting. Now that we know that, we can use it to our advantage. It's that simple. What I will be looking for with regard to, let's say, Bitcoin, because it's the granddaddy of them all, I want to see, like I said, Bitcoin break above 10,000 and then stay there, or go maybe 10.2, 10.3, 10.4, drop back down to 10-ish, and that would be a really good point to buy more. Okay, I will keep you all on top of this, I promise. All right, let's talk about gold and silver here, people. The ultimate hedge against the hyperinflating debt from the Federal Reserve is physical gold and physical silver. And I mean ultimate hedge. That's my view on it. You're entitled to your own. I cannot stress to you, in my view, physical gold and physical silver are so undervalued that it's staggering to me. It's absolutely staggering to me to look at the price action of physical gold and physical silver in relation to global debt. It's just incredible. We should be many multiples higher with regard to the price of physical gold and physical silver, but enormous effort goes into keeping the price action of physical gold and physical silver suppressed. We know who's doing it. It doesn't matter. They will not get in trouble. This is JP Morgan. They are the supreme rigor of the price action of the derivative. So what that means is the physical is going to also suffer because of that. That's pretty much where we are at right now, people. And to me, in this environment of hyperinflating debt, that's the only thing supporting the illusion of the stock market. The stock market is being used as a tool to keep people brainwashed. Again, we are beyond Great Depression level unemployment. We have worse unemployment today, the real numbers, than the Great Depression. Okay? A small business culling has occurred and is continuing to occur right here. Small and medium-sized businesses. We have a horrible merger between mega corporations and this new American government. A new world order is already in place. That's what this entire thing has been all about. The charade of the virus. Okay, I'm not saying it wasn't real. People have died, people have suffered, but it has been overblown and overhyped. The charade of this thing has allowed the new world order to manifest itself in a very incredible way, how they have taken advantage of this. And what we've witnessed now is going to get much worse. A new set of rules are in place. A new government is in place here in the United States, the hub of the new world order. And we are about to see some incredible changes moving forward with regard to our freedoms and our liberties. And I want you all to be prepared for it. Look, it's very simple. You and I are able to see a little further down the road than most people, because most people have been fully and completely indoctrinated. It's been a very slow process for many years. the boiling frog syndrome. You all know that. But this thing here, the way that this virus was dispersed, the way that this virus was used as a ploy to implement the final solution of the Federal Reserve to be the buyer, lender, and owner of everything, to allow the merger between these mega corporations and the United States government to occur, has been extremely, extremely rapid. During this time, we've watched 35 million American citizens lose their jobs. More are coming. Regardless of if we're opening this whole thing up again, the damage is done. The damage is significant. But again, what's happening in the economy, we have no economy right now, has no bearing whatsoever on what's happening to the stock market here. The Fed hyperinflating their balance sheet is off the Richter scale. I love to say that. Stock market bullish. You understand? That's where we are. With regard to metals, you know where you should be. With regard to Bitcoin, I told you exactly how it would play out from 3,700 to 10,000. I'm telling you now, watch this pull. What's happening now? We got to go through that 10,000 resistance. We got to pull back to 10,000, and there is our buy spot. I told you I had to think about it. I wanted to see how it would play out. And with regard to everything I just covered here, I will keep you so far ahead of the curve that it's going to be mind-blowing to you. All right, look, I think this is a very important video, kind of long. Please share it, get it out there, and I'm going to urge you, if you have not yet signed up for my newsletter, do so. Almost 30,000 people so far have signed up for it. In the description of this video, you will find a link to my newsletter. It's 100% free for you. And that's it. I'm out of here. I will see you in the morning.